So here's the big question. You're interested in value investing and valuing and evaluating businesses on a deep level, but you don't know how, even after researching for hours, probably dozens of hours, hundreds of hours on the internet, and because nobody else shows you how to do it. This podcast has all those answers and much more about value investing and finance. My name is Jason Rivera. Welcome to Value Investing in Your Car.
Hey, Jason here. In this episode of value investing in your car, I'm going to tell you why you need to beware because the market is massively overvalued. Before I get to that, though, I need to let you know that you can get this video as a podcast anywhere in the world for free on all major podcasting platforms, iTunes, Stitcher, SoundCloud, Spotify, Anchor, and more. You can get this in the Value Investing in Your Car podcast anywhere on the go, so you can listen to your value investing and investing education anywhere in the world for free. Okay, so the market's still insane. I've been talking about this off and on for, well, it's been years really, but over the past, really since March, the market's gone nuts, frankly. Hit an all-time high of 29,000 something in February. Fell by about 35-40% in March when the coronavirus stuff first picked up. Now, as of this recording in mid-July, the market is back up near its all-time high. I think it's 2,000 or 3,000 points away from that at this point. And so there's a huge crash, huge rebound, and it's still going up. I don't understand what's going on in the market right now, frankly. Worst economic news we've seen since the Great Depression in terms of GDP and expected GDP, which will come out. Second quarter GDP in the U.S. is expected to just crater. And likely GDP estimates that will be the worst that we've seen since the Great Depression, or at least falls in GDP, since that we've seen since the Great Depression. Worst unemployment we've seen since the Great Depression. Banks are in massive trouble, like I talked about yesterday, because people aren't paying their bills because they're unemployed. Credit card companies, auto loan companies, mortgage companies, the entire financial structure is in massive trouble. Again, I talked about this yesterday, but the market keeps going up, still near its all-time high, even after all this. And then on top of this, coronavirus cases are exploding in the U.S., Brazil, India. Specifically in the U.S., cases are just exploded. Yet the market keeps going up. At one point today, it was up, I think, 450 points. It ended up about 20 points on the day, but at one point it was up another 2% or so. Makes no sense. To illustrate that, I'm going to show you my screen here of the Shiller PE ratio. If you're not familiar with this, it's all called the cyclically adjusted price to earnings ratio. This measures the value of the market. I think it's S&P 500. I don't see it on here. Measures the value of the market by stripping out inflation over time. So it kind of gives you a really good way to historically look at valuations. And before I show you that and kind of tell you about that above, the average P ratio of the market over the last 140, 150 years, it's about 17. That's about the average. Okay, of course, sometimes it's above that, sometimes it's below that, blah, 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 blah. Right now, as of this recording, we're at 29.4, which means we are, calculate it, 29.41. $76 6%-ish above the median kind of historical, again, over the last 150 years, valuation. Insanely overvalued. To put that into further perspective, the only other times we've been more overvalued in U.S. history in terms of the market was before the market crashed in the Great Depression in 1929, in the early 2000s tech bubble, and right before the market crashed due to the coronavirus in February. Those are the only times in U.S. history in the last 150 years that we've been more overvalued than we are now. We're substantially higher valued than, that's about a 26. So a decent amount overvalued, about 10% overvalued compared to 2007, 2008 time period. Does this mean the market is going to crash tomorrow? No. I've been saying the market's been overvalued for years because it has been. I don't know when the market's going to crash, but it's going to crash at some point, and it's going to be bad, especially with all the other stuff that's going on right now. But in the face of all this, massive valuations, massive overvaluations compared to the historical numbers, the horrible economic news, mass unemployment, coronavirus cases still spiking in the United States, the market keeps going up. It makes zero sense to me. Literally every person I talk to who knows I'm investing or who knows I invest asks me what's going on in the stock market. I don't know. I've studied an enormous amount of financial history, enormous amount of world history. The only thing I can that seems close to what we're dealing with right now in terms of the speculation that's going on is before the Great Depression. Rampant speculation. As two examples, Hertz filed bankruptcy, and usually in bankruptcy, as most of you know, the equity goes to zero, or it gets wiped out completely and gets replaced with new equity after the company comes out of bankruptcy. 10 days after it filed for bankruptcy, or in a 10-day period, its shares went up 888% because people are speculating and gambling on its stock, thinking it's worth more than zero. But it's not. If you actually look at the numbers, it's got a net debt position of like negative $10 billion or something like that. And it's probably even worse than that because you would write off things like inventory and the value of their cars and vehicles and whatever. You would write off some of that. So their inventory, their negative book value after you subtract their debt from their equity, or from their total assets from their total liabilities. There'd be far more total liabilities left over in the tens of billions of dollars range because they're so indebted. So the equity is worth less than zero. But people drove its price up 888% in 10 days because they are gambling and saying, or they're thinking that its shares are worth more than zero. Just because you see the kind of numbers and they own XYZ amount of cars, they own XYZ amount of properties. They have, I think it was $1 billion in cash. Subtracting all that, they have the value of the shares is negative equity when you consider total assets and total liabilities. And it's not even close either. Billions, tens of billions of dollars, negative equity. Company in bankruptcy, and the company shoots up 888% in a 10-day period. Another example, Wirecard. It was found to have, frankly, massive fraud issues. $2.1 billion went missing. Its former CEO is now in jail. And the company is going through bankruptcy proceedings because it's one of their covenants in their financial reports, or their, I think it was their debt, was that if they miss an annual report filing, that triggers their debt covenants and they can put them into bankruptcy. That happened because their auditor would not clear their financial statements, obviously, with the massive fraud issues going on. So they're going through bankruptcy. Their stock fell 97% in something like 8 days when all this kind of went down. Then it shot up 150% after that. Again, people speculating that the company is worth more than zero. In case of fraud, that's pretty much never true. Yes, some of their pieces and parts might be sold off, but generally that will not go to the company because the company will be in massive legal problems that they will have to fight or pay off or whatever. So those are just two examples of the craziness that's going on. Another crazy example is Zoom stock. I'm not using it right now, but I love Zoom. I use it on an almost daily basis. I have for years, even before this coronavirus crisis, to talk with students, to do trainings, to meet with clients, all that kind of stuff. I love its software. It's insanely overvalued though. It shot up just this year, I think something like 200, 300%. And it's got an insane PE ratio of something like 2,500, 2,200, 2,500, something like that. It's one of the most overvalued companies I've ever seen. Again, I love its software, and I use it on an almost daily basis, but the valuation is absurd, just like the valuation in the stock market is. I can't, again, the time period that comes closest to this amount of speculation we're seeing right now is probably 1920s, before the Great Depression, or before the stock market crashed and the Great Depression happened. Frankly, I don't even think another time period is even close, at least in U.S. history, maybe in other parts of the world. Tulipomania back in the 1600s, massive speculation, but that was more kind of stories. There's not data. There is some data, but there's not a ton of data going back. So in kind of modern times where there's actually information, I can't think of another time period that we're seeing as much speculation as we're seeing right now. And people are going to get crushed. To further illustrate this, I know someone who has never really been in the stock market before. I've told them I would help them invest if they wanted to help their business owner. I'd help them invest, and if they wanted to. And my wife heard that they're now, quote unquote, playing in the market. Normally I kind of try to contain myself when situations happen like that, but I couldn't even contain myself this time. I said, before I could even think about what was happening, I said to my wife, they're going to get crushed at some point. Again, could be next week, could be 2 months from now, could be 2 years from now. I don't know when it's going to be. But at some point, all this speculation is going to get people hammered. Or people are going to get hammered. And it's going to be sad to see, because not only we're already dealing with horrible economic issues. If people are doing this because they're stuck at home more and they don't know what else to do, I think that's probably part of it. I don't know, frankly, I don't know if it's another thing, a fear of missing out, a FOMO, seeing these huge gains in short amount of time, and then other people are jumping in thinking they can do the same thing. I don't know what it is, but these people are going to get crushed at some point, and it's going to be sad. Frankly, I don't know what else to say about that, other than if you don't know what you're doing in the stock market and you're playing in the stock market, you're going to get hammered. And I'm not saying this to be mean. I'm saying this more as a warning that it's not a maybe that it's going to happen. It's a pretty much likelihood that you're going to get hammered at some point. If you're playing in the market, if that's the words you use, you're playing in the market and you don't know what you're doing, especially with markets at or near their all-time highs. Mass unemployment, horrible economic news, and the market keeps going up because it's being inflated by the Federal Reserve. All the money is pumping in. At some point, it's going to crash. It's going to crash badly. Just like I said yesterday with the banks, I don't like talking about this stuff. if people want to make their decisions, I can give them my advice if they want it, but most of the time I won't even give my advice on that kind of stuff anymore because people just kind of make their own decisions anyways. So the best thing I can say is don't play in the market. Don't play in the market. That's like playing with brain surgery or playing with playing with being a lawyer. Would you want somebody to play around and advise you on that kind of stuff? If not, why are you doing it right now? That's usually what I say to people when we're talking about maybe dabbling in the market or playing in the market or something like that. Whatever the terminology is, it's gambling, essentially, is what it is. It's not even speculation. What's what we're seeing right now. It's gambling. There's a there's a huge difference between investing, speculating, and gambling, and we're seeing an enormous amount of gambling right now. It's essentially a casino, what we're seeing in the market right now, and it's crazy. Again, I don't. This could go on for another 2, 3, 4, 5, 10 years. I don't know, but the amount of speculation in the market right now is absolutely insane. Frankly, I don't get it. Again, I don't know if it's people sitting at home being bored. I don't know if it's the fear of missing out. I don't know what it is, but this rampant speculation is going on right now. People are going to get hammered, and it's not going to be good, and it's going to end with a lot of people in some financial issues, especially with the other stuff we're dealing with, the unemployment, all that kind of stuff. And frankly, it's going to be sad to see. But so if you, I don't know if this will help, but if you want to, if you know somebody who's kind of playing in the market, speculating, whatever they want to call it, it's not investing, but if they want to call it investing, share this with them. Again, I doubt it will work on most people, but if it helps even a few people, that would be a good thing, frankly. Again, I don't know when this is going to end, how it's going to end, but the probabilities are that it's going to end badly and relatively soon, especially if the coronavirus stays around for months longer, which at this point, cases are skyrocketing worldwide, so it looks like it's going to. So, again, I hate talking about this kind of stuff. I hate it. But again, nobody's talking about it. Everybody in the main kind of stream media, all the financial websites, markets going up XYZ today on hopes that the vaccine's going up or that there's going to be a vaccine, blah, 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 whatever the new thing is of the day. It's literally, normally in the short term, the market is run on emotion, but this is even an extreme version of that. And again, it's going to end badly. So I'd love to hear your thoughts on this. I'd love to hear your thoughts on the Shiller PE and what you think about the valuations and the coronavirus and the market being insane. Again, it frankly makes little sense to me what's going on right now in the market, which is why I still haven't invested anything. I tried to buy in March, but things fell so fast and they shot back up so fast that I wasn't even able to buy. My buyer just never got filled in the portfolio as I managed because things went up so fast. So I'd love to hear your thoughts on this. Love to hear your thoughts on the valuation. I'd love to hear your thoughts on your stories, frankly, on people saying they're playing in the market or speculating or using Robinhood for the first time ever and they're trying to make a ton of money or whatever stories there are. There's a million of them out there. I'd love to hear stories that you know of. If you're watching on YouTube, make sure to like, love, share, subscribe, and comment, and hit the notification bell so you're notified every time we release a new video, and I'm releasing new videos all the time. If you're listening on the podcast, do all that same stuff, like, love, share, subscribe, comment, and we'd really appreciate a review as well. The more reviews and views and listens we get on our YouTube and our podcast, the more people we can help. And so we really appreciate that. And until next time, we'll talk to you again soon. Have a great day.